Hello everyone and welcome to our Sibos 2025 series. I'm Karen Emmanuel Burns, reporter for FinTech Futures, and I'm delighted to say that I'm joined by Sonal Meghani. How are you today? And give us a brief introduction about your role.
Hi everyone, and thank you FinTech Futures for having me today. I'm Sonal Meghani. I've been in the security services industry for around 13 years, of which 3 of those years have been at BNP Paribas. The team I work in is the financial intermediaries client line, where we work together to evolve our custody and clearing solutions to meet our client and market changes. I'm looking forward to attending Sibos this year, where we know the theme is about the next frontiers of global finance. And I'm excited to connect and meet with my peers, discuss all initiatives relating to interoperability and resilience.
Super. Well, first off, how has the security services landscape evolved in recent years, and what are the big trends that you're seeing there at the moment?
So I'm going to cut this in 4 ways. I've seen that in the last couple of years, we've seen a lot of regulatory change, namely T+1 being the headline act. We've had India move to the T+1 settlement cycle in January 2023. We saw US and Canada move last year, and we now know that UK, Switzerland, and Europe will also be moving in October 2027. So this may again be an opportunity for many as the accelerated settlement cycles compress timelines. Many may want to reinvent their operating models and rethink their end-to-end flows. Another clear trend we are seeing is in relation to the changing client base. We've seen since the pandemic, there's been an increased participation by retail investors. They're easily enabled by app technology, granting them easy access to securities. We've also seen the asset class universes expanding. So there's still a place for traditional assets, but we're also seeing that private market assets are coming up, digital assets as well, and tokenized instruments. So we're now seeing a steady emergence of new market players that can support these instruments. And lastly, we're also seeing increased accelerated efforts in digitalization. And this isn't just automation, it's going beyond that in security services, where we want to make sure that our post-trade environment is seamless, scalable, and secure.
Super, thank you. And from a customer standpoint, what is it that they want from their their security services partners these days, and how are investor behaviours changing?
So I think clients still expect the non-negotiables, which is asset safety, operational resilience, and strong risk management. In the current market environment, when we're facing market volatility, cyber threats, you want absolute, or clients want absolute confidence that their assets are safe and that processes will hold up in any market condition. But what we're now seeing layered on top of that is that emergence of the digitally native investors, those next generations who, again, have easy access to securities via digital platforms. They've got instant access apps with intuitive interfaces, personalized insights. They're really bringing their presence to the capital markets at scale. So what we're seeing now is that it's not just about institutional investors, there's also a presence of retail investors too.
Super. And so what role do you see AI and machine learning playing in transforming security services operations and risk assessment?
So I think it's quite obvious to say AI and machine learning are no longer buzzwords. In security services, we're seeing both take up presence when it comes to client service, when it comes to business efficiency and risk management. And a lot of these tools can help to reduce human interaction, freeing up space for, higher value work. We're also seeing that behind the scenes, AI can play a part in streamlining internal workflows, working on client query handling, optimizing operational risk processes, and even in risk management, we see that it's helping us move from reactive controls to predictive insights. But what's very important when you consider AI and machine learning is how it's applied responsibly and safely. So this means it needs strong governance and oversight so we can remove hallucinations, data leaks, and as I'm sure it's known, trust is super important in post-trade. And AI and machine learning will only really succeed when clients and regulators can be ensured that it's being used responsibly and safely.
Absolutely, thank you. And so what partnerships or ecosystem collaborations are becoming essential for success in the evolving security services landscape?
So what's clear is that in security services, no one does anything alone. We don't operate in silos, and partnerships and collaborations are crucial. Again, in the current market environment, when we're facing significant regulatory change, when we think about client needs evolving, the most forward-thinking organizations are about building best-of-breed platforms. They are plug-and-play models with different providers, allowing you to switch up or add in providers to suit client needs or changing market evolutions. So technology collaborations are super important. We need to make sure that they help clients be agile, can help to expand service offerings. Data partnerships are also crucial. Everyone wants data. And with that, you need reputable data sources and reliable partners in order to provide that. What's also important are market utilities and infrastructures. They can really help interoperability and offer clients a seamless experience without fragmentation and silos. And I've left the last one deliberately, is our partnerships with our clients. It's the ones we co-create with them. We listen to their needs, we test solutions along with them. And when we consider this emergence of new asset classes or digitally enabled investors, we want to make sure that we shape the future together with them. And therefore, I think it's essential to have these 4 types of collaborations in order to build the future of the security services landscape.
Super, and you slightly touched on it there, but with the arrival of new asset classes, what are the new client segments that are emerging in the market, and which asset classes in particular would you say have been picking up the most traction?
So I think new asset classes are great because it gives an opportunity for clients to further diversify their investments. And that also then brings out an emergence of new infrastructures, new fintechs, new intermediaries that can help support investment in these asset classes. And I'd say it's piquing interest of traditional institutional investors and the retail client base. What will be interesting is that the latter client base may help to change maybe how these services will be designed and delivered. The new asset classes I think I see gaining traction is definitely private market instruments. We see equity and debt instruments rising rapidly, which again will require infrastructures to support investment. It needs sandboxes so that the governments and regulators can help align and adapt legislation. We're seeing digital assets also, and that's definitely moved from an experimentation phase to an integration phase. And custody and settlement discussions are evolving to ensure we can concretely support clients in a regulated framework. And last but not least is tokenized assets. We're really moving from pilot to production here, and for anyone or any security services provider to remain relevant, they need to make sure that they are supporting traditional assets and tokenized assets.
Super. And so what impact will the continued transition to shorter settlement cycles have on the sector?
So T+1 is kind of really changing the rhythm of security services, and it's likely that the tempo may only increase. It's going to compress any activity from start to finish in the trade life cycle. and it's going to require the largest and the smallest market participants to consider their end-to-end flows. It's also going to impact your domestic and international investors. So for many, it might be an opportunity to consider whether they collaborate with a fintech or a bank to help them manage such a change. What's crucial though is automation. You do not have the room forever in T+1 like you did in T+2. So many should consider how they can automate as much as they can. And this is really crucial where solutions like execution to custody are super helpful to clients as they help manage the end-to-end trade life cycle right through to settlement and confirmation. It takes friction behind the scenes and allows you to bundle on value-added services like lending or FX, which is super helpful for overseas or investors that face time zone challenges.
Super, thank you. And finally, a bit of a long one, so please bear with me.
Sure.
How do you see the regulatory landscape for security services evolving over the next 3 to 5 years? And what regulatory harmonization efforts across different jurisdictions would most benefit the security services industry?
So I think for the future of security services, it's going to be defined by 3 words, and that's secure, safe, and standardization. But there's also a crucial balance between risk, reward, and choice. And in this case, I feel like harmonization is critical. We've seen harmonization efforts in Europe, such as the Savings and Investment Union, which is aimed at developing cross-border investment, market integration, pensions, and retail participation. And all of that is to work to deepen financial integration in Europe. So it really is critical in improving operational complexities and interoperability. And if we consider the new asset classes that we've spoken about today, that really does require a harmonized environment in order to allow services to then be built at scale, as well as making sure we're compliant. And when you consider, standard settlements, standardizing settlement cycles, or changes such as regulatory or risk reporting, harmonization helps you to align the world together and makes it ultimately easier for the end investor. And with all these competing challenges in mind, it will be important for intermediaries and investors to collaborate with fintechs who bring them insightful value, but banks who are masters at navigating a changing world.
Super. Well, thank you so much for your time today. So now it's been really fascinating talking to you. And just quickly, for anybody watching out there, please go check out our other content at the FinTech Futures website. And yes, once again, thank you so much for your time. And I look forward to seeing you at Sibos.
Thank you for having me.